Welcome to today's What Will Move the Market show. I'm your host Prem. It's Wednesday, January 28, 2026, and here is everything you need to know as the markets open for today. Let's start with what happened on Wall Street overnight. The S&P 500 recorded another milestone, closing at a record high of 6,978.59, up 0.41%. The Nasdaq Composite surged 0.91%, climbing to 23,817, propelled by semiconductor and artificial intelligence strength, as investors positioned themselves ahead of mega-cap earnings announcements. However, the Dow Jones Industrial Average stumbled, falling 0.83% or 408.99 points to close at 49,003.41. The sell-off in the blue-chip index was driven by healthcare weakness, particularly a steep 20% plunge in UnitedHealth after the company warned of its first annual revenue decline in nearly 3 decades. Chipmakers including Micron, Nvidia and Broadcom rallied sharply, while General Motors jumped over 5% after raising its 2026 guidance. UPS also delivered strong earnings and revenue beats. This divergence between tech strength and healthcare weakness tells us traders are actively rotating into growth narratives and artificial intelligence investments while stepping back from near-term healthcare exposure. On the Indian ADR front, we saw mixed overnight performance. Infosys Limited sponsored ADR declined 1.62% or 30 cents, trading at $18.25. HDFC Bank's sponsored ADR moved up 0.9%, adding 29 cents to close at $32.44. ICICI Bank sponsored ADR outperformed with a 1.88% gain, up 55 cents to $29.75. Reliance Industries sponsored GDR slipped 0.33%, losing 20 cents to land at $60.3. The key takeaway here is ICICI Bank showing relative strength overnight, which Indian investors should note as the Nifty opens today. Moving to Asian markets and GIFT Nifty guidance, which matters significantly for the Indian Open. Japan's Nikkei 225 rose 0.49% overnight, closing at 53,056. Hong Kong's Hang Seng advanced 1.1% to 27,106, continuing its momentum from positive Wall Street cues. Shanghai Composite posted a modest 0.25% gain to close at 4,757. These moves reflect Asian investors taking comfort from strong US tech earnings and avoiding aggressive selling, despite Trump's tariff rhetoric against South Korea announced yesterday. The GIFT Nifty 50 index futures are signaling a positive open for Indian markets today, currently trading at 25,442, up 1.06%. This premium of around 265 points above yesterday's Nifty close suggests institutional buying interest and confidence ahead of the budget presentation on February 1st. The Asian momentum combined with GIFT Nifty strength indicates a constructive opening for Indian equities, though traders will remain cautious, given that we are just days away from a critical union budget announcement that could shape market direction for the remainder of the fiscal year. From a geopolitical perspective, President Trump announced yesterday that he is raising tariffs on South Korean imports from 15% to 25%, citing Seoul's failure to ratify a trade agreement ratified last year. The move impacts automobiles, pharmaceuticals, and lumber products exported to the United States. While South Korea's Kospi index declined initially, it recovered partially on some bargain hunting, but the broader implication for risk sentiment is that tariff volatility remains a constant wildcard. Trump administration officials have also signaled more tariff announcements could be forthcoming, which keeps global growth narratives on edge. The Federal Reserve, meanwhile, is expected to announce today at 2 p.m. Eastern Time that it is holding interest rates steady in the 3.5 to 3.75% range, maintaining its pause in the rate-cutting cycle that began in September. Fed Chair Jerome Powell will hold a press conference at 2:30 p.m. Eastern, and investors will be listening closely for any forward guidance on the pace of policy normalization in 2026, particularly given recent weakness in labor market data and inflation remaining above target levels. On the domestic front, India's markets are bracing for the union budget presentation on Sunday, February 1st at 11 a.m., making it a historic working Sunday for Indian equities. Market participants are anticipating several key policy priorities, including potential tax relief for salaried employees, a possible increase in home loan interest deductions from 2 lakh rupees to 5 lakh rupees, and sustained government support for capex spending in critical sectors like defense, semiconductors, and medical devices under the production-linked incentive schemes. The budget is also expected to signal India's commitment to fiscal consolidation, while maintaining the investment-led growth framework that has underpinned equity markets through the recent volatility. Foreign portfolio investor outflows have been a persistent headwind, with FPI redemptions of approximately 2,253 crore rupees in just the first 16 days of January, marking a challenging month for external flows. However, domestic institutional investors, including mutual fund systematic investment plans, continue to provide substantial support to markets, with monthly SIP flows exceeding 29,000 crore rupees and driving the underlying demand for Indian equities. This domestic support cushion and the impending budget announcement are likely to keep Indian investors constructive despite global headwinds. Now for our technical outlook. The Nifty 50 closed yesterday at 25,175, finding support near the crucial 25,000 level after a strong rebound from morning lows of 24,932. Key resistance remains entrenched at 25,400, and a decisive move above this level would negate the prevailing bearish setup and establish a sustainable uptrend. Below today, immediate support sits near 25,150, with the critical psychological 200-day moving average providing the next meaningful floor around 25,000 mark. Bank Nifty is oscillating within a similar range, and traders should watch for breakouts above the 25,400 zone, which would signal genuine upside momentum. Until that breakout materializes, a sell on any rallies to resistance remains a prudent tactical approach. In the commodity complex, gold is trading at an elevated level around $5,208 per ounce, up 0.54% overnight, as investors maintain safe haven positions amid geopolitical tensions and tariff uncertainty. Silver surged 1.47% to $113.78 per ounce, continuing its strong bull run that has seen the precious metal rally significantly in recent weeks on the back of industrial demand revival. West Texas Intermediate crude oil remains stable at $62.55 per barrel, down marginally 0.02%, as traders assess the balance between OPEC supply management and global growth concerns exacerbated by tariff threats. These commodity moves suggest inflation pressures remain in the background, and commodity importers, including oil-linked Indian equities, will need to watch these price levels carefully. The market is entering a critical week with the Federal Reserve decision today and the Indian budget coming on Sunday. For tactical traders and investors, the key principle today is selective participation on any strength while maintaining downside risk management. The budget could either reignite investor enthusiasm if it delivers bold policy reforms, or trigger profit-taking if it disappoints on expectations. Similarly, any hawkish signals from Fed Chair Powell could rattle Asian equities given the strong dollar implications and capital outflow risks for India. Use any bounces today to de-risk positions and keep exposure measured until we get through these major event risk catalysts. The Nifty's ability to hold above 25,000 is crucial, and only a clean breakout above 25,400 would justify aggressive long positioning. Stay tuned for our evening wrap, and send in your questions and comments to engage with our community. Subscribe to this podcast to hear us every single day for your market updates. Thank you for listening to What Will Move the Market, and we'll catch you in the evening session.